Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we'll focus in on the ongoing developments in the banking sector globally. Last week, we started the week with Credit Suisse being rescued by its rival in Switzerland by UBS. Looking to last week, over the course of the week, news flow was pretty much dominated by developments within the banking sector for a number of reasons. And this culminated again on Friday, where we saw quite significant weakness across a number of European banks, in particular the German banks, with Deutsche Bank and Commerzbank both being pretty weak on the day in terms of their share price performance, down at the lows well over 10%. They did rally to close not at those levels, but still down quite significantly on the day. I think the other aspect that was probably grabbing attention as well on Friday, that was the cost of insuring against something going wrong in one of these banks, what we call a credit default swap, was increasing quite significantly. So if we look out over the past couple of weeks, the cost of insuring against a default by Deutsche Bank has increased from some 90 basis points or 0.9% to over 2% at points on Friday. So that just indicates that ongoing level of challenge that the market is assessing for these banks at this point in time. I think the other thing that we really need to focus on, and what does it mean for us as consumers, what does it mean for businesses as well, and really it's the transmission mechanism of banks within the economy that is the focus at this point in time. In particular, how banks think about making their lending decisions, the criteria that they use, but also the cost of providing that lending facility to us as consumers or to businesses. Both things that are likely to increase as a result of what we're seeing at this point in time. I think this was really neatly covered by the Federal Reserve when they discussed this last Wednesday. And if I just read the statement that they made, its recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring and inflation. The extent of these effects is uncertain. And that really brings together the main areas that the market is really focused on at this point in time and trying to understand the linkages and the outcomes of these points. The other point to think about then is, what are we looking for this week ahead? Certainly there will continue to be a real focus in on the activity of banks, what regulators are saying and what we hear from central banks. Notable last week actually that we did see all of those central banks that were meeting with the objective of raising interest rates, they all did. None of them didn't increase interest rates last week, which is, I think, quite a notable statement for us to all contend with. Looking to the week ahead then, very much focusing in on inflation data in the US with personal consumption expenditure. That comes out on Friday. I'll leave it there, but please do join us over the rest of the week. Many thanks.